Good evening again, mentorship traders. Wednesday evening, 25th of March 2020, and very unique phase of our life as we lock down ourselves for our own benefit. It seems like the index, Nifty, and the overall Indian equity market also thought of doing some good for itself. And we'll talk about the first 10-15 minutes about Nifty, Bank Nifty, the sectors, and maybe a few stocks which one should look forward to for the rest of the week and going forward. I hope everyone is safe, everyone is within the safety and comfort of their own residence. Please continue doing that. I think we are doing pretty good to save ourselves and the immediate future. So let's boil down to Nifty. As you can see, I have the Nifty daily chart open in front of me, and tonight using the Iris Plus software and not the usual trading view charts, because I would like to run some scans quick in front of you to check how the stocks or the sectors are playing out, which can easily be done using the Iris Plus software. So first, let's go to a much larger view using the monthly charts. And I did discuss with you that the index has been very respectful towards the 89 exponential moving average band since 2003. For almost 17 years, it had held on to this long-term moving average. And now, this month, so far, with a few days left, it has closed below it. Huge expansion on the monthly ATR. Never ever we have seen this kind of move in the market. Never ever have probably any of us have experienced something like this. So exceptional times, exceptional outcome, exceptional behavior. So that's how the Nifty is from the monthly perspective, down 25% so far. Testing the 89 EMA and whether it closes below or not on a monthly basis. I have been repetitive about two psychological levels, sub 8K and sub 7K, and I think that the index will try to test the lows of 2016, which is 175 points below 7K, which is 6825. The first level that we were talking about repetitively is the sub 8K, which was 79 something, from where we so far have a bounce back so far. And I think the next leg will take us to the 2016 lows sub 7K. And ideally 7K and 6300, 6500. See these highs which I'm talking about, 2008, 2010, exceptional resistance zones broken out can act as a good zone of support. So this is the zone I'm looking at, 63, 69 kind of zone where it should ideally come to a halt. It should ideally give us a soft landing there. Nevertheless, let's see what's in store. That's the long-term picture. Nothing much to take away from our weekly charts. Deeply oversold, broken down, no sign of any divergence. But the divergence has taken a shape day before yesterday on the daily chart. I can see a clean divergence on our momentum indicators. It in fact fits in well in our contra strategy, which is hook, but apart from the fact that there was a little bit of range expansion, but it is playing out well. Today we've got a 6.5% move from the Nifty, and I quickly ran a report designer on a one-day percentage change on the stocks, on the indices, and I can see here financial services, private banks, Bank Nifty, services, and Nifty. These are the top gainers. So essentially, the bounce back came from that sector, that zone of the market which mattered the most. which matters the most. That is the heavyweights. If I run this, okay, before I run that, I would also like to quickly check guys which did not participate. Not only pharma did not participate, FMCG was 2%, relatively underperforming considering the index was 6% up. IT a little tepid, but IT has started to move quite a few days back. IT gave the first bounce back on last Friday, then a kind of 2-day move this week. So metals did not participate and pharma did not participate so far. If we look at the movement from the Nifty 50 stocks, and if we run this, we can clearly see that the big move comes in from the big guns. Reliance was, in fact, gained far more than this, what we see on our charts. HDFC Bank, Kotak Bank, UPL, Maruti matters, Grasim doesn't matter so much. HDFC definitely matters with a 10% move. On the downside, Yes Bank, I'd rather not talk about it. IndusInd Bank is at 300 levels. Can you imagine this? Now, it's broken all the lows and it's down to levels of 2012. Now, this is not a good sign. This is definitely not a good sign. It's an ideal rise on a, sell on a rise candidate. So be a little careful if you want to accumulate stocks because it's falling and IndusInd Bank looks relatively cheap. I would not touch it. And the others like ITC stocks, which had started to shift to a downtrend much before the market did, are the ones which are still underperforming. GAIL, ONGC, Coal India, IOC, underperforming. They were all down. Let's take a look at the Bank Nifty. But before we go to the Bank Nifty, I would like to talk about some levels which comes from the lower time frame. I am here at the 75-minute time frame of the Nifty. And we can clearly see that the low of 8555, high of 8555, we have a confluence of support and resistance. So this is the level that one should look at. If you allow me, I can quickly drop in a line like this, and this is the immediate resistance. In terms of our trend indicators, all the moving averages are beautifully down and we are in a downtrend. In fact, now with today's move, after today's move, most of us will get a short swing trade. So looks very interesting. Let's see how it plays out tomorrow being the expiry and again day after tomorrow. So that's the level one should look at, 8555, 8600. That's the obvious level. If it breaks above that and fails to sustain, then we might have a dip down. On the downside, there's not much to look about, but I would say the short-term supports, intraday kind of support should come at the psychological 8K. The reason for that is if you come and take a closer look, this where this 1, 2, 3, 4, if you look at these candles, every time it was teasing the 8K and coming down, 8K coming down thrice. And if you look back a little bit towards the left, this was the level from where it bounced back. So 87950, 8K, these are the supports. Let me take you to the 15-minute chart and mark this level for you. There you go. This is the level I'm talking about. Sub 8K, little below 8K, 7990, 7980. This is the support and this is the resistance from a short-term perspective. Now, Bank Nifty did make a divergence on the smaller time, on the not on the smaller momentum time frame. Neither did it make on the larger momentum time frame. So it wasn't as good as a setup on the Bank Nifty as it was on the Nifty. So we take this bounce back with a pinch of salt, this 8% move that we've seen today. Monthly is a similar story that we have with the Nifty. Weekly also, it's trying to give a big bounce back from the intra-week low. Daily, we're not that great. We're not so excited that, wow, we have a divergence and there's a bounce back. It's nothing like that. So we're not too comfortable, but we are happy that it had participated because banks like HDFC Bank, financial services like HDFC, SBI, it matters. These are heavyweights. In terms of levels, again, similar kind of story. You can see that erstwhile supports may act as some amount of resistance. 19K mark on the Bank Nifty. Considering we are heading towards expiry tomorrow, so it will be very interesting to see how the volatility plays out. I sense that what I sense is not going to matter too much because of the way market opens up or down with gaps. I'm showing you a couple of gaps that Bank Nifty will get itself into if it bounces back a little further. It's going to enter into the 19K zone, and between 19K and 19 are close to 19,800. It's got a pretty decent wide falling gap. Previous lows also confluence at that zone. So overall, it's going to get into some serious resistances above 19K. Higher time frames, of course, are weak. So, like I sense that for the Nifty, we might see some amount of ease off ahead. Similarly, for Bank Nifty, it is very, very clear coming in from the lower time frames above 19K. Let us draw the supports. Similar erstwhile highs, which acted as good resistances earlier. This is the level, should act as a support, which is sub 17,008. So 19K and little above as the resistance, and 17,800 little below, around 17,700 is the resistance for the Bank Nifty. Please mind you, I have used the cash market charts here for both the Nifty and Bank Nifty for this analysis that we did right now. I feel that this kind of a scenario, uncertain scenario that we are in right now, and how closely it will now relate itself to the developments of the COVID-19 worldwide. What I'm trying to say before I move on today's class is the pandemic statement always comes much late because it needs to confirm itself. So market did not spook itself that much mid-December or Jan. Yes, it was trying to go up to chart. If I open in front of you, and especially the monthly chart, you notice that it's December when it tops out, and especially the weekly chart. So this is November, this is December. The main spook happens over here, right? So we are now in a stage where the markets, the overall environment, the sentiment and emotion is now got very directly correlated with the COVID-19 and its results, how we tackle this war with COVID-19, and any development over there would definitely get some kind of support for the markets. Now, mind you, technical analysis, we believe that most of these news are priced in, are discounted. It's very difficult to discount this. I don't think the market will be able to discount. So markets are going to stay reactive. I don't think if someone says ye to price mein high already and it has been discounted, this is not that kind of a market where the market is in a position to discount. All right, in 3 months time COVID is going to go away, let's start buying now. I do not see that happening. I feel that the markets are going to stay heavily reactive to the developments from our side or from the COVID side. If COVID makes a comeback and etc., it will react. And what I'm trying to say is market is going to zigzag both ways, till we reach a stage where we state confidently that now we have a vaccine or now we have proper medication which can cure thing and we can live with it. We may not be able to kill it, but like hundreds of others, we are going to live with it, and that's where the market will find its foot back. It's about matter of time now. Okay, so that's it for the market views and my view. As always, mentorship traders, let's talk about the trades. How much profits did you make this week so far?